BTC could pump to $50,000 by the end of the year and reach as high as $120,000 by the end of 2024. This is the latest assessment from Standard Chartered, one of the world's biggest banks. And this prediction was made a few days before Ripple Labs won a landmark case against the SEC, which of course caused a massive pump for altcoins and saw BTC gain over 3%. But before you go breaking out the champagne, let's take a moment to do a bit of analysis of our own. So, in this video, I'll break down the British multinational's bullish prediction, examine past predictions the bank has made, and put it all in the context of Bitcoin predictions more generally. And a quick heads up too, this is not financial advice, just education and insight with a sprinkling of entertainment. Now, Standard Chartered's bullish outlook revises an April prediction that put the price of BTC at $100,000 for the end of 2024. Back then, the bank's head of digital assets research outlined several reasons why the price of BTC could rise to 6 digits. These included the recent turbulence in the banking sector, the stabilization of risk assets as the US Federal Reserve concludes its interest rate hiking cycle, and the improved profitability of crypto mining. Standard Chartered also acknowledged BTC's advantages as a, quote, branded safe haven, a perceived store of value, and a means of remittance. Meanwhile, another factor in favor of BTC's projected price increase, according to the bank, was the European Parliament's overwhelming endorsement of the Markets in Crypto Assets, or MiCA bill, to regulate crypto asset markets. But all that was back then. Now the bank has revised its 2024 year-end prediction for BTC to 120k, a 20% jump in just 3 months. The main reason for this revision is mining. The bank's revised forecast assesses that Bitcoin miners will reduce their sales of BTC. This will in turn reduce the overall supply hitting the market, thereby, in theory, driving the price higher. And the profitability of Bitcoin mining plays a crucial role in shaping BTC's price movement. When BTC's price is higher, miners can cover their operational costs by selling fewer coins and retaining more in anticipation of future price increases. Standard Chartered's analysis suggests that miners have been selling 100% of their newly mined BTC at recent prices. However, with the projected price reaching $50,000 by the end of this year, miners are expected to reduce their sales to only 20 to 30% of their holdings. This strategic adjustment significantly affects the daily supply of new BTC coming onto the market. And as basic economics dictates, a decrease in supply coupled with an increase or steady rate of demand should result in the price of the asset in question going up, holding all else equal, of course. Moving on and beyond mining, there are several other factors that contribute to this bullish outlook for BTC. The one that many of you will be familiar with is the Bitcoin halving, which is likely to take place in mid-April 2024. This once every 4 years or so event has historically shown itself to be a hugely positive catalyst for BTC's price action. For those unfamiliar, during the halving, rewards for miners adding blocks to the blockchain will drop from 6.25 BTC to 3.125 BTC. And this reduction not only decreases the daily amount of new BTC entering circulation, that is, the inflation rate, but also increases the costs associated with mining and securing the network. The halving ensures a controlled release of BTC and contributes to its scarcity, which in turn increases its value. These factors, I should add, have been significant driving forces behind Bitcoin's previous price hikes. Many see halving events as triggers for future bull runs. Beyond the halving, though, there are also some macro factors in BTC's favor as well. The most significant of these is the explosion of institutional interest in cryptocurrencies and Bitcoin in particular. The decision by BlackRock, the world's largest asset manager, to file for a spot Bitcoin ETF propelled other giants to follow suit. BlackRock has a near spotless record in securing approval for its ETF filings, and so hopes are high that it will be approved. As I mentioned in our previous video on the topic, which I'll link to below, if BlackRock and others are approved for a spot Bitcoin ETF, it will make it easier for regular investors to get exposure to BTC and, most likely in the long term, drive prices upwards. That's, of course, good news for those of us who hold BTC. And by the way, if you want to know what else I hold in my portfolio and receive insights not found elsewhere, subscribe to my weekly newsletter. But hang on a moment, why do we attach such importance to predictions like this? Isn't it all fugazi?
It's all a fugazi. You know what a fugazi is?
Well, crypto price predictions from big institutions like Standard Chartered are significant, even if they're not always accurate. The associated reasonings provide valuable expertise and insights from dedicated research teams, which carry weight and, sometimes, credibility in the market. They attract attention from investors, traders, and the media, potentially influencing market sentiment and trading decisions. All that said, of course, it's true that no one has a crystal ball, and Standard Chartered has been significantly wide of the mark before. In September 2021, the bank made a prediction that BTC would double in value and hit $100,000 by early 2022. Standard Chartered's prediction reflected their belief in the potential for BTC to become the dominant peer-to-peer payment method in a future cashless world. However, in reality, BTC's price was subject to significant volatility and fluctuation during that period. It peaked at its all-time high of a shade over 69K in November 2021 before dropping like a stone in December. So, that call of Standard Chartered's was pretty wide of the mark, but not nearly as bad a call as that made by a Citibank analyst who boldly stated in November 2020 that Bitcoin could surge as high as $318,000 by the end of 2022. In fact, BTC closed out the year down approximately 65% at $16,500, thanks in no small part to one Sam Bankman-Fried. Moving on. And it must be said, Standard Chartered hasn't just got bullish calls wrong. In late 2022, they predicted that BTC could potentially drop to $5,000 this year. But it rallied from those December lows and is now over 30K. Never say never, of course, but it looks like the worst is behind us. If we do get 5K, oh mama. The bank's assessment at the time was that it expected that gold would experience a resurgence in 2023, especially as equities resume their bear market and the correlation between equity and bond prices shift back to negative. However, while Standard Chartered did note that the 5K scenario is considered extreme and falls out of the market consensus and their own baseline views, they said there is a non-zero probability of it occurring.
So you're telling me there's a chance?
And that prediction wasn't out of line with other predictions at the time. Veteran investor Mark Mobius told CNBC in late 2022 that he foresaw BTC falling to $10,000 in 2023 due to rising interest rates and tighter monetary policy from the Federal Reserve. I made a similar prediction around that time, and if you want to know my top 10 predictions for the year, you can check out our video on the topic below. Given the crypto and macro developments of recent months, I'm far more bullish now than I was. And if you want my take on Standard Chartered's call, I'd say there are a few things that need to happen to make it realistic, not least of all, a loosening of monetary policy by the Fed. In plain English, interest rates need to start coming down. I, for one, am not expecting this to happen until next year, but there are heartening signs that the Fed is winning its battle against inflation. Assuming the Fed does start to lower rates next year, then that, along with the halving in the spring and, we hope, an all-round improved economic outlook in the US and elsewhere, should mean that a 120K BTC by the end of 2024 is very possible. I should also say that 50K by the end of this year is also possible, assuming inflation doesn't come roaring back and assuming something in the US economy doesn't break before rate cuts start being talked about. So, that's my 2 cents. But what about the top-end bullish BTC predictions? Who else besides Standard Chartered reckons BTC has much higher to climb from here? Well, there's Tim Draper, for one, the billionaire venture capitalist who previously predicted BTC would reach $250,000 by 2023. He's now pushed back that assessment to 2025, but remains optimistic about the continuing efforts of engineers in enhancing Bitcoin's underlying technology. Now, Tim may sound bullish AF, but Cathie Wood, the founder of ARK Investment Management, has doubled down on her forecast that Bitcoin will reach $1 million by 2030. $1 million for one BTC by the end of the decade. Wouldn't that be nice? And as we're on the topic of price predictions then, folks, what do you all think? What price can BTC hit? Are Standard Chartered, Tim Draper and Cathie Wood on the right track? Or are we heading lower from here? As ever, if you're thinking of investing in BTC or any other crypto for that matter, I encourage you to do your own research before committing. I'll leave a video on that very topic that you may find helpful in the description below. If you do want to invest, check out our deals page where you can get the biggest discounts on the best crypto wallets and up to $40,000 of bonus airdrops on offer at the best crypto exchanges. For trading tips, jump on over to Coin Bureau Trading and learn from the best. And as ever, smash the like button, click the subscribe button, and share this video as you see fit. That's it for today, folks. Thank you for watching, and I'll see you next time.